one who to trust like this. You don't wanna be stuck up on that stage singing, stuck up on that stage singing. All I know are sad songs, sad songs, darling. All I know are sad songs, sad songs. I'm just a singer who already blew her shot. I get along with old timers cause my name's a reminder of a pop song people forgot. And I can keep a girl, no, cause as soon as the sun comes up, I cut him loose and work's my excuse. But the truth is I can't open up. But you don't wanna be high like me, never really knowing why like me. You don't ever wanna step off that roller coaster all alone. You don't wanna ride the bus like this, never knowing who to trust like this. You don't wanna be stuck up on that stage singing, stuck up on that stage singing. All I know are sad songs, sad songs, darling. All I know are sad songs, sad songs.
All right. All right, guys. Welcome to a new episode of Bitcoin full charting. Okay, I'm just gonna go quick today and make a nice video of what I'm seeing on Bitcoin. First of all, well, this Fibonacci, I mean, it can be reverted. I would just notice this one. I mean, this is the normal Fibonacci that we trace. Of course, if we are tracing a correction of the downtrend, this should be opposite, like that. Boom. And let me remove this and that. Okay. And of course, I mean, in this case, this will be the 38%. As we can see, the last pattern, 8%. And of course this will be 50%. I mean, the center line don't change when you reverse the Fibonacci, so I'm still good. So let's start from the this little part of the trend on the 4-hour chart. I post my some of my prediction on the channel, and we knew that there were some strong resistances coming up, so it was a matter of when that it would have dropped. My short position were open at this previous high where it got rejected at the first time, but then, you know, it dropped, touched 23%, and it broke up again. So if we look at the 1-hour chart, look in the 1-hour chart, there was that drop. So I call short here. The price dropped down, and that's, you know, at 2%. That, you know, some people might have opened a 10x leverage, 25 leverage. So this could have been some good profit here, but then he stopped here and he went all the way up to 65.90, meeting the 38% Fibonacci retracement, and then it dropped like pretty good there. How much he dropped? 3%, which is you know, pretty massive drop in BTC. 3% of his way. Anyways, so what I noticed there, looking at the 4-hour chart, well, there were some resistances like moving average 200 was there, matching up with 38%, and then Ikimoku Cloud. Look how he arrived right on MA200, and it dropped, and now the cloud is getting really red and big above it. So even though it might come back, because we know the price right now has been manipulated. I don't know if you guys noticed this, but it's pretty clear to me, and that's one of the reasons why I don't really go look inside and see 30 minutes, 15 minutes, 5 minutes, because you know it's a big gamble there. So I like to see more the big picture to have a better understanding, removing the noise, let's say. Now, of course, if we bounce back, I mean, we touch here on the 38, sorry, in the 23% retracement, then we bounce back up. Let's switch to a normal candle just to see what happened. Okay, there was a nice rejection candle on top, a nice doji. And you can see after the doji how hard BTC dropped there. Now it might come back up, it might go down. Like, I mean, at this point we don't really know what's gonna do by looking at this time frame. Let's remember CNBC was bullish yesterday, so you know we counter traded them most of the time, so that's why it dropped, I think. And I mean, even though BTC will keep going up, I think this resistance here is gonna be a strong one, 6.5, because the cloud is pretty thick at the moment, and as you can see, it keeps dropping. I don't like to enter trades when there's not a very defined direction. So if I, you know, have and it drops right here. So if I have a 60-40%, for me still a gamble. So I like to enter the market. I like to enter altcoins. I like to enter everything when I have more percentage. On 80% maybe. I'm a safe trader, so we are a safe team. So we don't want to really enter stuff while we while things are uncertain. But you know, with our risk calculator and you know, you always using a position size calculator and the risk management, you can enter trades even if the market is crazy. You're just gonna risk to lose more compared to, you know, just chill, wait for the mass that completes, and then you go heavy. We are more swing traders, so we like to analyze the market, see what's coming, and then when things look good, we go in with a bigger part of our portfolio, and so on. So anyways, this is what's happening in the 4-hour chart. Anyways, let me know if my microphone is giving any problem. It should be fine. But let's go check. I wanted to show you guys the big picture, because that's what I see things very interesting, and we can kind of try to figure it out where BTC is really going and what support and resistance we should really pay attention in order to make our trades, in order to buy halts, in order to decide when to accumulate, in order to decide when to open nice long position, when to open nice short position, and so on. Okay, so let's see what I got here. Okay, I have like 1 million BTC charts. Let's see which one I was evaluating. Okay, this is that. Let's see which one is this. So I think this is the one I wanted to talk about. Let's see. Okay, well, this is a nice one, just that shows, you know, BTC in the daily. We can even put the weekly, doesn't really matter. But let me remove some indicator. Moku, moving averages. At this point, I don't need that. Okay, BTC is making higher lows, so this is an indication of a possible change in trend. Okay, so it's been doing another higher lows here, if you notice. If I connect those lines, this was another example of higher lows. Lows, higher low, higher low, higher low, and then he broke down. So the trend was changing. So and everyone, you guys remember, we're waiting for this triangle to break, right? And you know, nobody knew if it was a bearish pennant, bullish pennant, and so on. So it was kind of a tricky one, and it broke down. And now it's happening pretty much the same thing. Is making higher low, higher low, higher low. If it keeps this trend, if it doesn't break this support line here, I'm bullish. But if we drop more than that, we can see exact the same thing that happened before. Of course, the triangle in this case, it's a little bit different, because it will be this triangle here, something like that, or even better, you can trade something like that. I mean, there are some people that just average everything down. They don't like to trace highs and low precisely. So I've seen around many trend lines. This is logarithmic scale, by the way. I like to chart in that thing. People trace those kind of trend lines cutting into the weeks. I mean, this is an average, you know, just to see the overall trend. What is the overall trend doing? And you know, you change the line, you cut off every fucking candle, and that's it. You know, it's a way to do it. I'm not saying it's the right way, because I like to see the trend really made up of many trends. Okay, so for me, I will trace a million trend lines to see where things is going. But you know, just to give an average, sometimes people say, okay, this is the trend line is going that way, and we might see things here and there. I don't know if I have my chart that I trace. No. No. Or maybe my live stream. Anyways, okay. So in Canada here is what, 9:30 a.m. Nice day, because you know the BTC is doing whatever it's gonna do. It didn't go to 7K, so I'm good. Anyway, let's check a few things here before to go into the main chart that I want to explain. Well, we have seen a nice bounce here. I connected these lows just skipping this wick. You know, maybe this week was just a false breakout, because you know I can connect 1, 2, 3, 4, 5, and 6 points. I mean, that's a pretty good support for me, and that's the support I'm gonna be looking if we drop. If we drop, you know, something like this might happen, right? And if you guys can check here, we touch once, we touch another one, we touch a third one, then we made like a bull trap, and then boom boom, And now it might happen again. It's going up, it touched 50% Fibonacci retracement, and boom, back down. So it might happen, so we have to be careful. Things are not clear yet, volume is terrible, so you know, I don't see totally bullish indicators here. There are some. I mean, we are making higher low, as I said. We bounced here. If I check Ekinashi candle, we're turning green, and you guys know that that's a very good sign for me every time I see Ekinashi. But still there are many things to look for, because it's not just Ekinashi. You know, you cannot just base your idea on Ekinashi. It turns green, buy. I mean, I wish it was that easy, but it's not. Some other indicators, let's check. Well, the EMAs here are about to cross bearish, and I don't really want that to happen. But if it does, you know, we have here, this is the 20, the 150, then might cross bearish, making a dead cross, and in that case, the pattern will keep dropping. Probably, you know, I mean, people might see that. I mean, the moving average are a representation of the price, so it's just a lagging indicator that comes after the price. So if the price drop, of course, the moving average will cross. But you know, some traders really focus on those cross, and you know, because they cross, they might sell. Simple as that. In this case, RSI and MACD on the daily cannot really tell us so too much. I mean, RSI still looks bullish here. MACD about to make a golden cross, but everything can change, of course. Those are very, RSI is not that laggy as MACD. MACD is very laggy, so in order to see what's happening, we have to go check a little bit the lower time frame. And you guys can see here already RSI is already dropping. So if one day would tell us that we're going up, here it's telling us that we're going down, and maybe MACD will follow. Even though it crosses, it might recross again and go down. Then 8 hours RSI still dropping. We see a red candle on Ekinashi here. The 4 hours already dropping. I mean, we know these 4 hours. Look at RSI, touched the 70 level and is dropping, so it didn't break 70 level. MACD above 0 might be crossing soon and go down, so it's really hard to tell what's gonna happen in the short term. Now, what else? Before to go in the main chart that I'm excited to show, I want to see a few other things that I noticed here. What I was looking at. Sometimes you have so many indicators. It's just such a super gappy, I think. Yeah, the index. Oh, it retraced now. Oh, this is funny. Let me see. Oh. Okay. So this is the index that I use for the super gappy. I mean, it's exactly the same thing. The gap indicator. Let me remove Bollinger Bands here. So the gap indicator is all this moving average all in one indicator, and you know, you can tell by the cross kind of the move is gonna make. So the gap here is trying to cross. Like, I'm not sure if it will, because you know, again, it's a moving average, so it can be laggy. But sometimes I use this index that tells me that a possible bull is coming. Of course, when it's about, what is 9, and when it crosses above 9, I'm way more bullish, because you know, here you can see. Actually, let me make this black so you guys can see better. Okay, you know, it tries to go up here, and when it breaks this level, it's bullish. So here I can start to see something. But if I change to my Ekinashi, it's still flat. Remember, Ikinashi candles average everything down, while the normal candle, you can actually see the current price. You guys can notice this by the last candle. So the last candle here shows me 6447. I mean, by the graphic, you don't really know what's happening, right? But when you switch to candles, you guys see better what's happening. It's more a real time, when Ikinashi is just an average. It's just an average. That the average, I can see the average from settings, show real price. So okay, look at what happens here on the side. So now it gives me two prices. It gives me the average price, and it gives me the real price, which is the real price of the candlestick. But if I put show just real price, that's what it's gonna show me, but it's not gonna be on the same line that the graphic shows me. Okay, so be careful when you use Ikinashi candles. Another thing, the TD sequential that I notice here, 1 2 3 4 5 6 7, and then start another count, 1 2 3. Yesterday there was a hate, maybe on another chart. Check. Oh, that's funny. So Bitstamp chart shows me 8, while Bitfinex shows me 7. But anyways, very close to 9. That's what I was looking for. A nice candle to go long, but it happened before, so I didn't long at this level. Even though you guys can see from Ikinashi how the body of the candle gets shorter. Then we have like a spin top, almost a doji. Sometimes we see a doji, and then we see a green candle. When the green candle happens, usually a reversal happens there. So that's the things that makes me think about a bullish. But you know, it's not gonna be 100%. We have to consider every other indicator, of course, to make our prediction. But anyways, we know we should focus right now only on on those levels that I said before, on the MAs. Let's focus on that. I think we should be going down at this point, but you know, I want to check this 23% Fibonacci that hold here. So if it probably is gonna bounce here for a bit. If it drops 23%, yes, it's gonna go down, I think. So let's go back to another study, which is very cool to see. So I was just looking at this trend. I was talking with my friend yesterday, and he made me show a few things that I think are really important to notice. I mean, this chart looks like a mess, but I can simplify for you so you guys see what I'm looking at. So we were talking about this falling wedge, this possible falling wedge that it's BTC is forming. A falling wedge is a bullish pattern, mostly a bullish pattern. You know what? Let me remove everything I do from scratch. Here you go. Okay, so the falling wedge that is forming, there's a possibility of this pattern to be like that. This can be a nice falling wedge. Okay, I mean, you can consider the candle close of this week. It will still be a good one, or you know, we can just trace 2 touch here and 3 touch on top, or 4. It's still a good pattern. Don't play with patterns. No, I mean, I don't totally see the pattern. I mean, if you have a pattern, you gotta trace it, and then you know, you evaluate other things. I like to see horizontal levels. I like to play Fibonacci, but this study is mainly about Fibonacci levels, not about the pattern itself. But you know, patterns are there, are good to see, so we cannot exclude patterns, because in BTC, I mean, I'm not saying they work, but you know, if we see a triangle, most of the time the trend plays between the triangle, and then if it fails or breaks up. If we see a head and shoulder, the head and shoulder is a pattern, why we should not trade patterns? Look, the head and shoulder that happened here, that was pretty clear right there, and they've been head and shoulder all over the place. So I'm just gonna make I want to show you guys how Fibonacci works here, how good this Fibonacci level are. So first thing first, we notice that see, starting from the beginning, if I trace a Fibonacci retracement of this bearish trend, okay, the first bearish trend, so I want to know how much this bearish trend corrected upwards. I'm gonna trace, of course, a Fibonacci retracement that starts from the top and goes to the bottom right there. So what we can see, how much this trend corrected 61%, right? Up. So it's a bearish trend, so we trace inverted Fibonacci, and right there, 61%. Let me make it this like that. Now, then we have another bearish trend, which is this one, right? And I'm gonna trace another Fibonacci to know how much this bearish trend retraced upward, right? Oh, sorry. Wait, I'll make it this opposite. Reverse. 38%. Okay, we can see 38% there, because 100% it's on top, because we have to see how much this retrace. So this from here retrace 23 and retrace 38. So we can trace another one from here to there. Okay, this one retraces 61%. Then we have this other trend that retraces 61%. Okay. Then we have this other bearish trend that retraced 61%. So the only one that doesn't match with this study, of course, is this big dump that we had when we reached 20k. But inside the falling wedge, what I notice is that the Fibonacci so far are working really great. So this bearish trend retraced 61% and dropped again. Then this bearish trend retraced again 61%, as you guys can see. 61%, 61%, and here too. Here not precisely, but still, you know. Actually, this goes a little bit lower, like that. There we go. 61%. So every single Fibonacci is pretty much going where the Fibonacci says. 61% every time. Okay. So now if we were right here, if we were right here and we had this part of the trend and we wanted to make a Fibonacci extension to know where the trend could arrive, I could trace a Fibonacci extension from the top of the spike here to the bottom of the correction and pull back up to the retracement. So the point that I would have had would have been 78% or lower, right? So this is my extension, 78 of 100 or 100% too. Okay, so let's leave that in the place. So if I had that, of course, look at the trend where he arrived. He arrived right on that extension, 78% Fibonacci. And you guys have seen how precisely I trace this extension, this bearish extension. So if this falling wedge is really working, I might have the same situation here. So let's remove this Fibonacci 61% because they're worthless now. I mean, I just wanted to show you guys why the thing is happening there. Let's remove those. There, right there, there, and right there. Then if I want to trace another Fibonacci extension, I'm gonna trace from the top of this high to the drop and pull it up to the retracement. Okay, in this case I will have another 78% extension. And in that case, you know, that will be the target in case our trend turns bearish. Okay, so this could be, of course, you know, take this a consideration as a zone, of course, never like a precise level, because you know, I'm not sure about this support, because this support, you know, is traced with the wicks, but we can trace this support considering the candles. You guys can see, you know, this resistance that I trace doesn't really match up perfectly with every single, you know, high, because it just almost impossible to the trend can never be exactly on the resistance. You know, there at those points there are people that miss, people that manipulate, people that buy more, people that sell more. You know, you gotta just give an average sometimes. So even though I want to trace this perfect, it's not, I should not do it. It's good to trace more lines if you want to just consider where things can arrive, but you know, always consider a zone when you want to go for a target. So a possible target could be at this level if we break. If we break down what? Okay, so this is what I want to show you guys here. It's the same exact thing that happened before. If I trace this line here, this support line connecting the lows, I'm gonna make it what color? Red. So that's a support line that, you know, we were looking for before, right? And there are 3 lows. 1, 2, 3. Then what happened? The trend goes back up. Didn't really went all the way up where, you know, everyone was expecting to go. I don't think if you guys were in the market, but everyone was expecting to go here and then maybe break up, but it didn't, and he broke down hard, and then, you know, he went down, he stopped the 78% Fibonacci extension, went all the way up to meet the resistance, and now we are doing the same thing again. We're doing exactly the same thing. So everyone is bullish again, because yeah, we were pretty bullish. You know, everybody was like, oh yeah, it's making higher lows, higher lows. We're doing the exact same thing here, pretty much. Low, higher low, higher low, Everyone is bullish. Everybody thinks we're gonna go up, and guess what? When everyone thinks we're gonna go up, what happens? Usually we go down. That's a fact. You know, the sentiment, it's a big thing in cryptocurrency. So um, I mean, what everyone is thinking right now, you know, let's just think about what everybody is thinking. Well, everybody is thinking that 570, 575, so about this level where, you know, the flat bottom triangle that everyone is talking about, it's a strong support. You know, we know it. I mean, we know it's a strong support because there are many buys or many buy orders at those levels. So every time we touch that point, there is a massive massive buys that comes into the place. So I mean, even starting from here, I mean, this of course was not a strong support at this level, but there is a support there when we drop here, then when we drop here again, and then there is even another zone that is pretty strong, actually even stronger than that. It's 6-1 level, where he bounced many times. He bounced one, no, here 2 and 3, 4 times, even now again. But you know, those are horizontal level. I like to see more the trend making this diagonal, sorry, that's a hard word for me to say, trend lines and support. So everyone is thinking, oh my god, I'm gonna place my buy orders at 5.8 because it bounces there every single time, every single time, every single time. And guess what? Maybe this time it's not gonna bounce. That's how it works. And you know, everyone knows the Ethereum Bitcoin chart. Everybody was looking at them massive upward channels. Oh, Ethereum is going to like bring altcoins up. Ethereum, the bounce never happened. And that's those are the facts. So these things might happen again. If it does break this level, may do exactly like he did before. So a bull trap and then boom, down. Here could do the same. Could do a bull trap and back down. So that's a scenario. Of course, you know, we have to see many bounces. You know, it's not gonna go that easy. Probably if he breaks this red, we're gonna see a very strong drop down to 5.7, and then maybe a little bounce just to trick people, just to like kill some to make people that we're really bouncing, and then boom boom. And you know, if we go down in that case, of course, I mean, now I'm just projecting and thinking, but you know, those are not I'm not saying this is gonna happen, but there is a chance. We have to see then if that's possible, of seeing some kind of Elliott wave pattern that goes down like that. Of course, you know, this is just a projection. I'm not saying these things will happen, but just a scenario, okay? So an Elliott that could be really legit in this case, go down here, and that's where I think the party might start. By looking at the chart, we have this previous high, which could be an important level, and that's something we have to consider, because you know, yeah, we have the 78 Fibonacci, but you know, again, the Fibonacci might fail a little bit. You know, there are things called false breakouts and the bull trap and all kind of a bearish trap and all kind of stuff that can happen in this over manipulated market. So we always have to consider every single possibility that might happen, and the chance that we hit this previous high were at around 4.8. Yeah, it might happen just for maybe 5 minutes, but yes, it could happen. Just a very very hard deep down to that level, because I mean this level should have a massive buy orders in place. So remember, if 5,750 doesn't hold with the age, one second, my here, we might see a really panic sell off. So you can see like Bitcoin dropping really quick at that level. That's why, I think we still have space to drop here inside this space and don't go like wider. So we can reach right here around October 10. Maybe, I'm just thinking right now. Don't take me like on all my word when I say dates and stuff, because I'm just trying to see things here. Okay, so we can even drop lower, and let's remember, around, when is it, October 23, we might have the big news about ETF, right? So I will be looking for there. That's October 23, and well, that will be a massive buy opportunity in case, of course, ETF gets approved. So in that case, accumulating around this area, which is 48 to 52, that can be a very profitable area, because we are at the base of this falling wedge. We had a massive sell-off. Many people maybe won't believe that Bitcoin is gonna go back up again. All people that are gonna buy here, they're gonna get wrecked from the whales, because the whales probably aren't gonna market sell everything and then buy back lower. There are so many possibilities. The market right now, it's a fucking mess. So keep that in mind. And altcoin, talking about altcoins, altcoins, it's a tough call, guys. Like what I've been noticing lately is that altcoins are they're kind of pumped before BTC now. The altcoins start to go up, then BTC follows, and then altcoins pump even more to then slow down, and BTC slow down as a consequence. So it's very weird, usually the opposite happens, but there are many factors that can explain this thing. Then there are many bots that gets triggered every time BTC goes up 1%, or the bots buy alts, or they all go with those RSI that are oversold in 5-minute chart, 15-minute charts, 30-minute charts. So there are many factors, but if you play safe, you time it right, and you use that same position size strategy that is so important, and you consider your risk, you can play safe. Of course, if you have any bot that allows you to place stop loss in every exchange, that's the best you can do. Of course, when placing stop losses, I will put, of course, my limit way lower than my stop, so it kind of becomes a market stop, in case a stop market, in case, of course, a coin drop very fast. So your order might go right away in the order book. I mean, if you use Binance, you cannot make a stop market. You have to make a stop limit, right? So your order has to go in the order book in order to get executed. So you might get no filled, because stop limit orders are not guaranteed to be executed, while market orders are guaranteed to get executed, because they buy directly from the order book. While a stop limit, it's a limit that will go in the order book, and then it will get filled. So if you want to know more about market orders, stop order, you guys can research on your own, or we, as you guys all know, we run an educational channel that you can join, where we explain a few of those things. We explain a nice position strategy. We have our own calculator, and we are going to explain soon enough with Elisa, with the help of Elisa, that she's like good friend and amazing trader. She taught me many things. I mean, I think I'm a pretty good technical analyst, but when it comes to risk management and position sides, Elisa, she's the expert, and she taught me many things, especially how to use BitMEX at the best. So BitMEX is something that we are going to cover in our educational channel, and there is a way which is like, it totally blew my mind when I figured that out. There is a way by using your own calculator or BitMEX calculator to set up stop losses with a defined risk that you find that you have in mind. Let's see, if you want to risk 1% of your portfolio, right? And I want to make a trade that really respect my stop loss. So if I want to make a long position here, I want to go and I think my target is gonna be 20%, and I want to make, let's say, right there, I want to make a 1 to 3 risk reward. So my risk reward has to be 10%. Of course, I need to find my stop loss in the chart. So of course, if I cannot match my risk reward and I select a stop loss, I need to figure it out, a stop loss. So in this case, let's say I want to set up a stop loss as soon as we break this red line. So my stop loss in this case has to be, let's say here, where the low is here, but I might go a little bit lower, just in case this low supported. So let's say this is 6, and then I want to go for a 1 to 3 risk reward is at this level, but if we hit here, it still will be a nice trade, 2.20 risk reward. So let's say I want to open this long position, right? I can use this stop loss, which is 6%, and this entry in my BitMEX account, and always use one risk as a loss. Okay, so I can decide my entry. I can use the stop loss that I found on TA, 6%, and I can use my 1% risk of my position. So having all this detail, I will be able to get my position size correctly with the stop loss that I want and the entry that I want, and then it doesn't matter the leverage that you use, you're always going to make the same amount of money, the same profit based on your contracts. Of course, not based on your cost, because the cost depends. If I use a 50 times leverage, I'm gonna pay my position, the same positions. Let's say I have 10,000 contract. So if I go 100x, I'm gonna pay my position $100, right? So in that case, of course, it looks like I'm making more money, but the profit that you calculate is based on your total contracts. Okay, so it doesn't matter the leverage I use. If I use 100, if I use 50, if I use 20, if I use 5, it doesn't really matter. What it changes is the cost of that position. If you don't have enough money and you wanna have a $10,000 position and you have just $100, well, you have to use a leverage to borrow money. That's where it comes leverage. It's not trying to make more money with leverage. It's just a different idea, okay? So it doesn't really matter. If you put a stop loss that is higher than your liquidation price, using the calculator, you're always gonna lose your risk that you put at the end of the trade. So 1% risk every single time. It doesn't matter the leverage, because if you put 10 times leverage, your position is gonna cost, let's say, 10. If you put 1 leverage, your position is gonna cost 100. So it's gonna cost higher, and when it drops, it's gonna drop slower. But if you make a position that it's 10 times leverage and you pay just 10 for it, when it drops, it's gonna drop 10 times faster. So it's the same thing. I don't wanna, explain this in this video, because we are setting up a specific video with Elisa regarding this, where we're gonna explain all BitMEX, how to trade safe, and so on. But just to give you an idea that, and to give you a recommendation, that if you don't know anything about BitMEX, or if you're playing just, so you know what, I'm gonna put $100 at 50x and let my position get liquidated, or you don't know how to put stop losses, or you just, I'm telling you, you're just gambling. You're just putting money and hoping that it goes up, and probably if you're not following any position sites and any risk management, you're losing every single time. So keep that in mind. You have to have a strategy for BitMEX, otherwise it's bad news. You guys know that, so just be careful. I will keep just trading, normal trading, if you guys don't know how to use BitMEX and leverage very well. What else I can say here? Well, I don't know if you have any question. Hey, what's up, man? How are you? Yeah, I cannot read your Russian, but I think I think that's you. That's Eli. That's the name, right? Is it you? Yeah. So he's the guy that talk about the falling wedge pattern, and I gotta say, he thinks that we're going down 100% there. Like, for sure we're gonna go there. I like to play with ifs. So for me, it's always a if. When I trade, there's no 100% for me chances to go in a direction. That's for me pretty clear. So I will never say, hey, it's going to bounce here 100% for sure. It's gonna go to 10k for sure. Oh no, it's gonna go to 3k for sure. In my opinion, I think that's pretty clear that nobody is a genius, and trading is not math. Trading is odds, and the odds can change, and the market is over manipulated. The market, it's such a small market cap still. Like, everything can happen. So if you come to me and you say, hey, this thing is gonna go down to 5k 100%, no, that's not the case, because I don't know, for some reason might come a news up today, and BTC might go up from here. The support won't break down, and that's it, and then we go, and here we go. If these things doesn't break, that's the case. We might arrive here, then drop. So I like to study the trend while we go, and that's the way to do with this market. This is not stock market that we can predict such a long-term trade, but this thing can bounce here and go up, this thing can bounce there, so we need to figure this out. Of course, when we are in such of a tight area here, which is in between the falling wedge, which is 7k and 5k, I mean, it's a pretty tight spot right there. When we are up here and we see the corrections and indicators are super bearish, of course we open short position when we are top here, top there. Those are easier one. And you guys can see from the MACD, I mean, MACD here and there is look how higher they were. I mean, how can you don't short or those level or sell when MACD is, what is it, 2000? Now it's like not even like zero, like 2000. MACD was massively high. Look at the magnitude of that MACD. So people were buying here. Like there were actually people buying, because here there was the FOMO, right? Where people didn't know anything about Bitcoin and they were buying at 19K, 15K, 19K. They were buying. That was insane. But you know, then you know, of course, which was the best time to buy when MACD is below zero and crosses, and and when RSI is oversold. You guys can see as soon as I touch oversold and there was a bullish cross on MACD, that's was the time to buy. Of course, that's a 6K drop, and then again, and then again, and again, and again. So indicators are there for a reason. So, and you can see here RSI is not, it didn't really touch the bottom yet, right? So respecting the study I just said, you know, if we drop that the support, this is what we could see, right? So dropping again to the oversold area. And that's it. Okay, I think I'm done. It's killing my ears. I'm listening in earphone. Oh yeah, because I yell. I'm sorry. Yeah, I yell too much. Sound settings. Input. Yeah, so there was like a little of a crack in the headphone. I yell because it's just the Italian in me. Damn it! I gotta figure it out. This microphone. I just bought a new one, and headset. I paid $150 for it, but it's still no good. I guess I gotta buy the one that stays on my desk and I can speak without headphones. Or I should just not yell. Okay, well guys, hopefully you could understand my opinions here, my tips. Take it as, you know, not financial advice. Just, you know, this is just my idea. You know, if you like what I'm doing, please support me with a like, subscribe to my channel, spread the news. You guys know my link in the free channel. You guys know I have many channels. We have the cafe where everyone can chat. We have a collaboration channel where everyone can share his own ideas. If you don't have any ideas, you can come up to see this video on YouTube. You know, just check cryptovince.com and you will have all the links there. Okay, and I will talk to you guys later. Thank you guys. Have a good day. Bye bye.